A very good evening to you all, and welcome to the 20th episode of Market Replay. If you are tuning in for the first time, a very warm welcome to you. Just to give you some brief insight behind why I choose to do this, and that's simply to share my perspective and my understanding of how to trade the Forex markets using price action, right? For today's episode, we will be looking at the New Zealand dollar against the United States dollar, right? And the market data will be coming from the 3rd of August, which was this past Monday. Okay, what I will be doing is that in this data, or looking at this data, I will be highlighting the different areas of importance, and from those areas I will then be explaining how to take a particular trade in alignment with the Ace Forex Academy candlestick momentum pullback strategy. So let's get into it. Like with all videos, what you want to do is start by marking out your trend, right? At a bullish start, by a bullish start, but that didn't last too long, and then the bears then kicked in, right? So as the market was trying to find its feet, we had a very mixed up situation here, with trend changing quite quickly and not having sufficient pullbacks, right? But then the bears then kicked in, pushed the market to the downside, and we were then given an area of consolidation, right? And this was our area of consolidation. Price then continued to push to the downside, continue to push, and trend then eventually changed to the upside, where it kept pushing higher and higher right up to our day's close. What I'll be doing is reviewing this area of consolidation that I've marked and how we would have used it to enter the trade, right? Remember, I always highlight that these areas of consolidation are important to us because it is in these areas where we are then given the chance to enter a particular trade, right? We don't want to enter while the trend is pushing to the upside or while it's pushing to the downside. You always want to wait for trend to take a pause and then you enter the market, right? So let's have a look at this particular area of interest to us, right? Let's move on down. Okay, like I've been saying in the previous videos, and as standard procedure, what you want to do is start on your left before moving to your right. And what our left hand side then gives us is the formation of a area of support, right? And this then indicates to us that we have buyers trapped within this particular region of the market, right? Because they then see that price is fair enough for them to then buy New Zealand dollar CFDs against the United States dollar, right? With that understanding, we pull our Fibonacci tool out and forecast this entire move to the downside. Okay, and what we are then simply interested in is a close above 50%, right? And that simply indicates to us that our pullback has gone far enough, all right, for us to have a reasonable forecast of the profit. From that understanding, we then realized that we need a close above this low before we could enter the market, right? Let's forecast our Fibonacci tool again. And what we can then see in this particular region is that our minimum risk reward ratio that we aim for, which is 1:1, sits within our resistance zone, right? It sits within our turning point. So in this case, we would have not taken this particular trade, right? Because it was risky. I mean, history has shown to us that price turns around as it enters the zone, right? But if you then took the plunge, you would have then been well rewarded, because price then continued to fall and it went past 1:2, 1:3, right? and it 1:2, 1:3, and it kept falling right up until 1:4, right? And that's if you took the trading setup. But according to our rules, we would have not taken this trade because it does not meet our trading criteria, right? We know that price has a tendency of turning here, and because our way or our journey to our first minimum take profit target is interrupted by a support zone, we then do not take the trade. Let's move back to the highest time frame. What we can then see is that we had a fairly bearish day for the New Zealand dollar against the United States dollar, with strength to the upside coming in quite late. We were presented with one trading opportunity, and upon further inspection of that trading opportunity, we then could see that it was not worth taking, right? And that's simply because our minimum risk reward ratio profit target was then interrupted by a support zone. Okay, and that's how our Monday was for the New Zealand dollar against the United States dollar. Ladies and gentlemen, that then brings us to an end to this episode. If you found this video to be beneficial and it added some knowledge to the way you understand the forex markets, please do like the video. If you haven't subscribed, please do subscribe. Your support is appreciated, right? And while you are in the process of subscribing, or if you have subscribed, please do hit the bell notification icon so that you can be alerted the next time I upload a new episode, right? And then if you have a particular currency pair in mind that you'd like me to look at, please do drop your suggestion in the comment section of the video. Just to give you a hint, this was another pair that was suggested to me by a fellow viewer, and this is my response to how they would have traded the New Zealand dollar against the United States dollar on this Monday. Ladies and gentlemen, that then brings us to the end of this episode. Thank you for tuning in. I'll catch you on the next one. Cheers.